Now, for my next topic, I wanted to talk about the big layer one coins because a lot of them are off their highs. So one of the question I have is, so we're talking AVAX, ETH, Solana, Phantom, and even some of the up and coming ones, like Harmony, and I believe the symbol's Rose. Now, one of the questions that I have is for you is, what is the case for layer ones going forward? For example, is it a flood of money coming into DeFi? If the total value locked in DeFi doubled, even with the market stable or going down, would that benefit the layer ones? And if so, how would it?
Yeah, amazing question, Bill. So just with DeFi, even with layer ones, TVL is the most important metric that everybody needs to uh, look at. So with TVL, look into just two things. Look at how much TVL there is locked, and what percentage the TVL is growing, let's say week on week basis. So if the TVL is growing at a very fast pace, that's amazing. TVL is high, that's amazing. But then if you are very diligent and if you want to make a lot of money, you go in and see if the TVL is sustainable, or is the TVL because, let's say let's say in case of time in OHM, the DeFi projects had 30,000 APY, and that's why a lot of money was pulled in. So you want to see that TVL is basically sustainable and it's diversified across DeFi, NFT, gaming, metaverse. Sustainable TVL, high TVL, and momentum in TVL benefits layer one, and I'm going to explain why it benefits layer ones. So think of it like this flywheel effect. When you have high TVL, lot more people basically come to your platform to do transaction. When a lot of people come and do transaction on your platform, you generate a lot more fees. When you generate a lot more fees, a lot of those fees gets burned out, or basically when it gets burned out as gas fees, the layer one token supply decreases and the demand is still out there because of TVL locked, and hence the price increases. So you have this amazing flywheel reflexivity uh, as the TVL grows over time.
All right, interesting. So one other question I had was that, for DeFi, right? Is there any case to be made that in the legacy world, instead of having to try to buy bonds with like a 1% yield or a negative yield, is there a case for legacy to flood into DeFi to try to get a yield that's either equivalent to or better than inflation, right? That's the first question. And if so, are there any beneficiaries to that process other than the layer ones? For example, is there a case for Sushi or Aave? I know we talked about it beforehand and you gave me kind of an answer, right? Well, you gave me an answer, but I'm just interested for the audience, if money flowed into DeFi looking for what's called a positive real yield, as in return minus inflation, like what are the beneficiaries in DeFi other than layer ones, if any?
Stablecoins.
Okay.
So stablecoins like Luna UST will kind of will benefit. I'm not saying go buy Luna now. It's, I think, still higher price, but the way it benefits Luna, for example, let's say a lot of people lock up their funds in Anchor, where you can earn 20% interest. By the way, guys, if you haven't checked it out, so you take stablecoins. These coins in case of Luna is algorithmic. You buy the stablecoin, put it in Anchor, you get yield. TVL increases, more activity is generated on Luna, more stakers come in and secures the network, and you have this network effect. So Luna and Terra basically are beneficiaries. Now, in case of Aave and in case of Trader Joe, now this is a tricky one. To a certain degree, DeFi at the moment is very casino-like. So let's say when you're putting money in a US, like let's say you're lending money in a US stable, you're going to earn 5-6% interest. That's fine. That's amazing. But sometimes that interest is also paid in, let's say, coin of Sushi or coin of Aave, for example, or coin of Trader Joe, because these coins are inflationary. So what investors do is, okay, I get 4-5% from the stable coins and 2-3% inflation because of these coins, and my job was to stabilize my portfolio rather than speculate on Sushi and Aave. I'll basically take those coins and sell it in the market. So even though you can earn 6%, 5%, 4% interest rate on your stable coins, but that doesn't necessarily mean Sushi, Aave, Trader Joe could benefit, because these investors are there for safety rather than speculation, especially in a bear market.
Interesting. All right. So if there is a future in DeFi, is there a cross-chain DeFi revolution coming, or is that only theoretical? Because one of the things that I've read, Rune, Rari, and things like that, is cross-chain DeFi real, conceptual? Any thoughts on that?
Absolutely. I think maybe the future is in cross chain in 10 years' time. Maybe it's the world will look like, okay, Android and Apple or iOS and mobile phones, or Windows and Mac OS and computer. Like you'll have just two chains or three chains or four chains dominating the world. But next couple of years, when I speak to investors, when I speak to other VCs and developers, I think we are moving towards a multi-chain world. Definitely next 3 4 years we are moving towards multi-chain world, and DeFi at the moment is lacking that element, and there are only few projects that are really working on it. And one of them is Torchain, Rune. They had a previous hack because what they were trying to do was mind-blowing, and hence they kind of failed on the execution part. But if they make a comeback, I think that's one of the projects to look out for. So definitely in agreement on that. And instead of one another way you can play the multi-chain DeFi world is betting on algorithmic stablecoins, and and you guys are in luck. So apart from Terra Luna, uh, there is another coin which can become the next Luna, next Terra, and this coin hasn't launched yet. So we are very very early. In the private rounds, they did 50 60 million valuation. So this could potentially be a 100x 10x coin. So the reason why I'm bullish on decentralized algorithmic coins is, firstly, whichever ecosystem you are in, you'll need the stable coin, because I said you have bull markets and you have bear markets. In bull markets, you basically buy stable coins, and you can buy stable coins and use it to buy other assets. So there is a demand. And even in bear market, you want to buy stable coins because you want to park away your money. So there is always going to be a demand for stable coins. Now imagine this stable coin is not linked to US dollar, but it's linked to an economy of its own. That's why it's called algorithmic stablecoin. And when it's linked with the economy of its own, the other coin, so there are always going to be two coins. The other coin gets burned, so you basically accrue a lot of value from the other coin. So in case of Terra Luna, you have UST as a stable coin and Luna as a burning coin. So whenever UST demand increases, Luna gets burned. So that's an amazing thing, and I think uh, and I think decentralized stablecoins is the way forward, and I'm very bullish on this vertical. And Bill, I'll tell you why. Firstly, we don't know which chain is going to win, but we know that there is going to be application of stablecoin. Secondly, we just saw what USDT did. USDT, basically because of some kind of a fraud, froze 160 million in accounts. And plus, if US regulators or policymakers want to target crypto, they can literally just attack the banking layer, and we'll basically be orphans without stable coins. So in DeFi, we need a decentralized algorithmic stable coin which is native to our ecosystem. So whether it's decentralized exchange, lending, borrowing, synthetic assets, we need decentralized stable coin. And this is why I'm very bullish on Luna. And there's another coin I'm going to share my screen, give you some thoughts on that. One of the projects to look out for. 1 second.
Yeah, so that's really interesting while you pull that up, that this whole idea of Luna and the decentralized stablecoin, allows for huge growth. And also as a reminder, you have to also be careful, because in some ways certain stablecoins might be risk assets. They might have regulatory risk. So let me turn it back over to you.
Yeah, so we have this project launching on Secret Network, and Network is on Cosmos, and 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 I said earlier, if you're staking your Atom, you can get free airdrops. So unfortunately, not now, but let's say if you were staking your Atom 1 or 2 months ago, you will have gotten free airdrops of this coin called Shade. Now, Shade is the next Terra Luna, in my opinion. So you have these two coins. You have a Silk token and you have a Shade token. So in Luna, you have a UST and you have Luna, and they're kind of building up the same system. But another interesting thing is this coin is basically private. So don't not only you get like decentralization, but you also get privacy. And we love Secret Network. We have done a 100x show on it. It's amazing. And Bill, if later on, if you can see the charts, it has been making moves lately. So you get the privacy element, you get the algorithmic element, and you get like a next Terra Luna potentially. I'm not saying this will 100% be. The project is not even out there. We don't even have a token, but it could potentially be there. I saw founders video and I was like, wow, they know how to make a token economics. So guys, still this is an educational channel, so I want you guys to work hard, go and research about this coin. We are definitely going to do a deep dive on it later on. We might even include get the founder to kind of explain it to you why this could be bigger than Luna. And at the moment the private round is around 60 million. So we are very early on this if market doesn't know. Again, this is built on secret network. Secret network is built on Cosmos. So this is the UST version, and this is the Luna version. And basically there's a burning mechanism, and this has a fixed supply, so over the period of time it can do. So this is one of the alpha drops I've done for you guys.
All right, Mehdi, we appreciate that.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.